Now, I can't lie to you, folks. This has been one of the biggest days in terms of news I've seen in a while, as far as the stock market is concerned, or really just major companies. There's a lot of stuff going on today, and obviously the focal point of this video is going to be talking about Amazon. The company just reported earnings, but in bigger news, I mean, this is crazy stuff. Jeff Bezos is stepping down as CEO. I mean, the stock results, they've been mixed after hours, up 1.5% actually right now. It's been very choppy. So I don't know. There's a lot of things to really talk about today. We'll get into it. And not only is this going to be a video about the earnings of this company, it'll be just about the stock in general and whether this stock's worth taking a look at buying-wise. Because I think there's potential people get scared away when someone who's been a long-term CEO steps down. So there's a lot of questions to ask, and I'll see what I can answer out of that. But let's take a look at Amazon. First off, I do like to look at a history of the stock. I look at 1 year out and what the stock's been able to do. Up 69% nearly in the last year. That's quite an incredible performance. But you do need to take into consideration this last year has been the most tailored year for them ever. So before we get into these earnings, if you recall, and if you don't, I've got video proof of it. If you look at my earnings reports to watch video, I said that this company is likely going to do $125 billion in revenue this quarter, which was a high estimate. It's a high estimate, I know. They were expected 119, or 118, I should say. I think it was 119. And an EPS line, I thought it would be a beat by a good amount, by a pretty hefty amount, and I didn't necessarily know what that amount would be. It wasn't something I was sure on, but I knew it would be a very good beat. I said they could potentially put up some really good EPS numbers there. But I was pretty sure of both of those things. So, again, I've got the video proof, ladies and gentlemen. I'm just telling you. If you're talking about retail insights, I'm the guy to go to. I got the info for you. I'm an insider in the business. I know a lot about the ongoings. Just saying. So let's look at these earnings first. Holy crap. That's all I can tell you. Holy crap. EPS line of $14.09 is a beat by $6.96. Not only did they beat expectations, they doubled this EPS line. Doubled the profit line. Are you kidding me? I can't wait to see what that equates to, but that's freaking crazy. Sorry. That was really rude of me, and you didn't deserve that. But what's really impressive here, hey, remember what I told you these estimates were? I said revenue of $125 billion. You know what they did? $125.55 billion, up 43% year over year, beats by $5.82 billion. Can I get a round of applause, ladies and gents? The thing about me is I just know what's going on with this company. You know, I know things here. You gotta trust me on these. It is such an incredible beat to increase by 43% when you're talking about over $100 billion. First off, this is the first $100 billion quarter they've ever put up. And on top of that, they did $25 billion over that. This is the first $100 billion quarter, and they did $125 billion. That's freaking incredible. It shows you just the power they were able to do over the Q4 period and through holiday sales, and how much e-commerce was such a big part of this year's retail sales. It really was. So expectations, net sales are expected to be between $100 billion and $106 billion, or grow between 33 and 40% compared to first quarter of last year. For this quarter upcoming, this guide anticipates a favorable impact of approximately 300 basis points from foreign exchange rates. Quarter one revenue consensus was 95.5, so their estimate quite a bit above that estimate there. Or that consensus. Really nice. Operating income is expected to be between $3 billion and $6.5 billion, compared to $4 billion in the first quarter of last year. And the guidance assumes $2 billion in related costs of COVID-19. On to the big news. I mean, we can't deny it. This is probably the biggest news report here. Jeff Bezos is stepping down into the role of executive chair in quarter three. So again, this is not an immediate change, but quarter three of this year. So we're talking about really another 6 months down the line. But Andy Jassy is the current head of Amazon Web Services. which is a major part of this company, by the way, really big part, and continuing to be a major part that it's going to take a lot more in the future too, will become the CEO. So really interesting stuff, because it leaves you with questions. Obviously, who is Andy Jassy if you're not familiar with this company? And we'll see. Words from Bezos here. If you do it right, a few years after after a surprising invention, the new thing has become normal. People yawn. That yawn is the greatest compliment an inventor can receive. When you look at our financial results, what you're actually seeing are the long-run cumulative results of invention. Right now, I see Amazon as the most inventive ever, making it an optimal time for this transition. So Bezos really confident in this transition period because of all the changes going on in this company. Really interesting stuff. So I don't know. It's going to be weird. It made me want to think about who is this Andy Jassy guy, and I did some research on this guy because I wasn't actually huge in terms of, I didn't know a lot as far as the executive suite was concerned on Amazon, and this guy's career is incredible. It's quite incredible. In 1997, which was the year I was born, by the way, yeah, I'm a little baby. He joined Amazon as a marketing manager straight off the road. In 2003, by the way, he founded Amazon Web Services. Are you kidding me? With 57 people. That is crazy. In 2016, he was promoted to senior vice president, from senior vice president to CEO of Amazon Web Services. CEO of Amazon Web Services since 2016. This guy's been in this role pretty well since 2003. Okay, let's not lie to you here. I mean, pretty well he's been in charge of Amazon Web Services for 17 years now. I mean, that's incredible stuff. So the question becomes from there, what in the world do you think, who takes this role? That's a really, really interesting thing to talk about from there. Estimated net worth of $377 million, quite incredible. I mean, it's a whole lot of money. As of November of last year, talk about even more now. But in 2016, the guy earned $36.6 million. I'd retire off that. Shoot. So really interesting. This guy's been in Amazon for a long, long time. But for these restricted stock awards, you see how much that's what all these executives get paid, and it's crazy stuff. Yeah, really crazy stuff. So, yeah, overall, pretty darn cool. Finding out who Andy Jassy was, and this is the new CEO. I've heard some things about this already. From what I've seen, people believe that Jassy was going to be potentially offered a CEO role in another company. So Amazon did this as a way to keep him on board because of how monumental he's been to this company. And Bezos probably is still going to have a really big part in terms of the operations of this company. And I don't doubt that at all. I think he's really going to be involved in everything going on. Don't be shocked on that aspect. Really don't be shocked. You see Amazon crosses $100 billion revenue mark. The first time the company's ever reached the $100 billion mark. Incredible. Total North American revenue totaled $75.35 billion in North America versus $73.98 consensus. Really big beat there. International was at 37.47, above the consensus of 32.49. Really good. Amazon Web Services fell a bit short of the expectations at 12.74 versus 12.8 billion. Again, that's $12 billion this guy was over. Now, the new head's going to have to obviously take charge of that. It's going to be interesting. Operating income came in at $6.87 billion. Doesn't seem like a whole lot, but compared to the consensus of $4.46 billion, that's really incredible. Just you might expect a little bit more with the revenue line so high, but nothing too crazy there. Yeah, operating margin's not the highest on this company. It's not a shocker from everyone they pull from. So we saw the expectations as well. Here, just from their press release, nothing crazy that I didn't cover so far. So full year net revenue of 386 billion is quite incredible. Compared to 280 of the year prior, that is such an incredible increase, 38% there. Talk about, I mean, how do you do that? Net income for the full year was 21.3 billion they brought on. You'd almost expect a little bit more. I mean, I don't know if that's hard to say, but yeah, it's interesting stuff. So that's for the most part all that this earnings has shown. They talk a little bit about some potential in the future and pretty much everything going on with the company. They do some explanations as far as the company is concerned, which is cool and all. Good thing to look over if you're interested in purchasing this company. So let's look. I believe they're going to have a balance sheet for me on here somewhere. It's a little bit further down, I believe. There we go. Here's my balance sheet. They're giving me a full year comparison, which is nice. I love it. Total current assets on this company right now, the far right column, sits at $132.7 billion. That's a lot. It's a lot. Good increase in cash and cash equivalents. Last year, total current assets set at $96 billion. So really big increase there. Total assets in general sitting at $321 billion versus $225 of the year prior. You kidding me? Big increase in operating leases, property, and obviously that increase in total current assets. It's a massive increase there. Now liabilities, one that you need to mention. This accounts payable line, quite high. You see total liabilities, total current liabilities actually nearly outweighs the assets, $126.3 billion versus $87.8 billion. Quite an increase in terms of liabilities there too. It is crazy to see. I don't know. That is quite crazy. But stockholder equity rose quite a bit because there's not a lot of long-term debt on this company. There really isn't that much. So stockholder equity sitting at $93.4 billion compares to $62 billion of the year prior. That is crazy stuff. Balance sheet, not too bad on this company. You could expect a little bit better, but based off the business that they do, it's not unexpected. What's crazy is we look at the valuation on the stock. If you're thinking about buying it, a market cap of $1.56 trillion is an incredibly high market cap. I can't lie to you. But in the scheme of things, you think about the fact that they brought in $380 billion of revenue. That's right. That's really only around 4 times the amount in terms of market cap to what their revenue was like. 4 times. That's pretty cheap, actually. In the grand scheme of things, especially the way the market is right now, this stock is really a kind of cheap valuation. The PE ratio isn't necessarily there. I get it. It's because that EPS line, like I mentioned, could be better. But compared to the valuation in terms of market cap to what this company brings in, seems pretty crazy how cheap this is. And from a financials perspective, you need to bring it up. Look at the amount this company's increased revenue from $177 billion 3 years ago to $321. I mean, what the heck? This company has brought in incredible money. Really sitting at 380 now. I mean, that's $200 billion increase in 3 years. That's a lot of money. I don't know how that's even feasible, but they've done it. So you need to consider that when you're thinking about this stock. A lot of crazy news going on. I don't think this thing's unreasonable where it's at right now. I think there may be some fear. I was hoping for a little bit of a dip because there may be a buying opportunity. But I think people do realize this company's it's dominant, even without Bezos necessarily at the reins, even though he probably will be. There's a lot of things headed forward for this company, a lot of great things. Hope you enjoyed this. You have a great day.